Paul, let's start with the oil story here. We're talking a little bit about these OPEC cuts, which, again, were largely priced in the markets. A little bit of a shocker there, but you are still seeing Brent crude at $80 a barrel. How much of a difference does this make to the macro picture?
I think that any signs of weakening crude prices is generally a positive for the global macro picture at this point, not least from an inflation perspective. If it's one more thing that's cooling in the global economy, then that's going to feed through into prices at the pump, and that's going to be good for consumers of gas and related products as well. So long as it's not too much of an indication of really bad demand and bad economic growth. I think what's interesting about China in particular is while refinery runs are slower and there isn't that much demand or consumption, part of it is because of the big change that we've seen in the makeup of the industry and in that big rollout of electric vehicles that everybody's talking about. So it might not be entirely as negative from that sort of demand section as you might otherwise think. So a couple of things to keep in mind there. But in general, you know, if we are going to get a little bit more supply coming back towards the end of the year, then that should cushion the pressure on oil prices, and that should be one more feather in the hat for those trying to bring inflation back down to target.
So in the context of that inflationary story as well, we've got plenty of election coverage, but kind of monetary policy sitting on ice with the ECB meeting on Thursday as well. Paul, where are the cracking points in the FX market right now?
Oh, boy. Well, I think the ECB is going to be really interesting from the perspective of, yes, everybody knows it's been very well telegraphed. They're planning to cut, but how many more cuts are they going to be inking into their forecast for the rest of the year? And how fast is that cut going to look relative to what the US is going to do, what the BOE is going to do, and how that can shake up things in the FX market? But, you know, the frailty, the fragile point really is still on the other side of the world, the place that isn't hiking particularly quickly and has much lower interest rates than the rest of the world, which is the yen. We still see that under weakening pressure. We see those fractures, and if that volatility starts to blow up, then that could be the thing that upsets the rest of the market.